Hey, welcome back to the Mining Pod presented by CleanSpark. Got a news roundup for you guys. Bitcoin and Bitcoin mining news. Matt Kimmel and Colin Harper are with me as always. You guys did a good job last week when I was gone, so thanks for covering. We'll get into our update provided by hashrate index on difficulty and network hash rate, and then we're going to go over to Trump land and talk about the tariffs that he's going to impose on the semiconductor industry. Not a lot of news out on what that actually is going to mean for Bitcoin mining, but we'll speculate with you guys. And then we're going to go to original piece by Colin talking about how the China mining ban and the China Bitcoin ban that was talked about last week is fraudulent. And then we'll land the plane with a few more stories, including a cry corner on a now defunct Bitcoin mining pool that had a heist way back in 2020, $3.5 billion worth of Bitcoin. So stick around for that one. Okay, let's hear a few words from our sponsors and then on to the show.
You ever get into your buddy's car and think, dude, how do you live like this? There's half-eaten Taco Bell on the console, a pile of garbage and fast food cups and bags, rumbling in the trunk. You look behind you under your seat and you're pretty sure you saw something move, but you don't know what? Well, how do you think your Bitcoin miner feels if you're not keeping on top of your filtration game? Y'all need to get on Colorado Air Filters. Colorado Air Filters is a major supplier of air filtration systems for Bitcoin mining sites. And they're currently running a summer sale on their inventory, so now is the time to act. Whether you need HEPA filters, new shipments or installations for your containers or your large-scale mining facilities, retrofitted buildings, Colorado Air Filters has it all. And units are ready to sell now. Contact sales at coloradoairfilter.com and use the code MININGPOD to claim 15% off today. Again, that is sales at coloradoairfilter.com with code MININGPOD.
Hey, Will here with Blockspace Media. Did you know that we have individual feeds for all our shows? If you're watching the Mining Pod, Bitcoin Season 2, or the Court Show, be sure to check out the individual feeds. You can find them on your podcast player of choice, whether that be Spotify, Apple, YouTube, etc. Just type in Blockspace Media and you'll find all our shows pop up, or just type in the individual show name like the Mining Pod or Bitcoin Season 2. Be sure to hit that subscribe and give us a 5-star rating so we can continue to bring you the best content in Bitcoin. Okay, welcome back. As always, we're going to kick it off with some charts from our friends over at Hashrate Index. Mr. Difficulty Weatherman, Matt Kimmel, what are we seeing in the Bitcoin network this week?
Very small change from last week. I think we were, at the time of recording last week, at about 119,000 a coin. Now we're 116 to 117. Hash price still at a positive place if you are kind of thinking about this halving period at $58 per petahash second per day. I think, Colin, you have to remind me that last week we were just a third of the way through the difficulty epoch, but we were anticipating a downward adjustment. Hash rate had been kind of trickling down, coming off from about 950 to 900 exahash per second, and that's reversed. So now we're anticipating we only have 10% of the epoch left, and we're right now expecting about 1.33% difficulty adjustment increase. So I wonder if you guys have some perspective on that jump in hash rate, if some of the maybe curtailment hash rate has come back online, or if there's some machine deployments, maybe something to do with the public equity space. Maybe you guys have some insight you could share.
2 words: China.
China.
China, 2 words.
If you draw it out, it is.
If you draw it out.
But yeah, I mean, it's a good thing to point out, Matt. When we were on the horn last week, hash rate was taking a hit. We thought we were going to get a negative difficulty adjustment, but it is just absolutely roared back. We're at an all-time high on the 7-day average of 972 exahashes a second. So close to that zeta hash. We can almost taste it. I don't really know what's going on. I would imagine that maybe, some of the heat waves in the U.S. are subsiding. The Southeast got absolutely booty smacked last week and a week ago with some pretty severe weather in terms of
heat. Is that the
heat.
technical definition?
Yeah, it is actually. It is. That's what we call it. It's booty smacked. You get booty smacked and then you produce booty sweat, from the movie Tropic Thunder. So anyway, it seemed like maybe some of that weather is cooling off a little bit. But I think that this is also probably, to your point, Matt, some expansion from some of the public miners coming online, and who knows what's coming out online throughout the rest of the world. But 972 exahashes a second, pretty big. Wouldn't be shocked if the next difficulty adjustment, assuming we continue this trend, would be much larger. But it looks like right now it's going to be maybe in the realm of 1.4%, something like that, and won't take too much of a hit for hash price. But hash price sitting at about $58 per petahash per day. Not amazing, but not awful.
I'll throw in there that we can look at some of the recent miners, the public miners who've just been deploying a ton of hash rate. So Kango had a big update, but that was already deployed hash rate, so we wouldn't really take that into account. They just that headline was big. They had 18 exahash, but that hash rate was likely already online, just under a different entity. But the other miners we can look at, CleanSpark's been running really hard, getting to that 50 exahash operating. Iron also around the same mark. Mara, they have a lot of hash rate deployed, but not a lot of hash rate running as much. I think they're at 75% operating hash rate, the last charts I looked at. And then we have some of the other ones also deploying pretty aggressively. Cypher put out a great note this morning. They're getting towards 18 exahash, and Riot as well. So the public miners now are really pushing that number higher. And then we also can't forget about the private guys like Tether. Rumored to have close to, I've heard rumors of 70 exahash. So those things are out there. That's why it's going up. I think the summer stuff, I'd have to look at the charts and the 4CP stuff to really know if that's being impacted as much. We do know, though, in other jurisdictions within the US, there was a lot of curtailment, which typically we only think of curtailment for Texas and Bitcoin mining because they like that active market. But CleanSpark disclosed in their update that they had curtailment in Georgia and some other sites. So I think that's probably where you're seeing a lot of it happen. Okay, you guys ready to go to China?
China.
Just kidding. We're going to go to Trump land first. We're sticking in the good old USA. We're going to head over to this nice little story from our friends over at Data Center Dynamics. Trump says the U.S. will charge semiconductor tariffs of about 100%, but not for companies that build in the U.S. Subdeck, specifics were lacking. I think you can say that about a lot of Trump policies. First few lines of the article here, U.S. President Donald Trump says he plans to levy an approximately 100% tariff on all chips and semiconductors coming to the United States. However, companies that are building or planning to build in the country will not be made to pay. Timelines for the long-threatened semiconductor tariffs were not shared. Of course, this came yesterday after the news of the large investment into the U.S. from Tim Apple, aka Tim Cook of Apple. And so that just kind of signals to you that the Trump administration is going to keep bonking on corporations' heads, get them to move into the US. For Bitcoin miners, obviously, it's okay, how is this going to impact the cost of bringing in electrical equipment, mostly ASICs, into the US? We've already seen a lot of the tariffs have kickback effects, I guess I'll say, for Bitcoin miners. I'll let Colin get into the specifics there a little bit more in a second, but we've seen the prices of ASICs go up around 15, 20% plus as the end up purchaser of the ASIC has to take up on that tariff. And now with the semiconductor part of it, if the semiconductor is being made, say, in Taiwan and then packaged into a Bitmain unit that's built in Indonesia, you're just picking up all those additional marginal costs. But the silver lining here is maybe there's other ways to build out the manufacturing landscape here in the future. There's a few Bitcoin miners we know who are already trying to build in the US, if not just assemble. So, Colin, I want to throw it to you, though, and get some more thoughts on this story.
I'm kind of confused by it, and I would want to see more guidance. But if you're importing chips, then doesn't that necessarily mean that you are going to be building whatever the chip powers in the US? So what's the exemption if you're building in the US? maybe I'm being totally smooth brained about it, but are they saying that they are going to put 100% tariff on the chips themselves for any devices that come into the US, or is it just the chips standalone? Because if you're importing the chips, then necessarily you would assume that they are going to be integrated into something that is in a US manufacturing process, right? Like, am I making sense?
Yeah, no, that makes sense. I think we can look at one of his statements and then we'll have to wait because that's seeing how all this stuff goes. But he says, quote, even though you're building and you're not producing yet, in terms of the big number of jobs and all the other things you're building, if you're building, then there will be no charge. So if you can understand that statement from Trump, which I don't think a lot of people can, then you're good. But I think from a perspective of just the silicon itself and the semiconductors, like they're trying to bring that investment onshore here. And, the Biden administration did this as well, but they did that with more of a carrot. Trump's doing more of a stick. The carrot was the Inflation Reduction Act back in, I think that passed in 23.
You mean the CHIPS Act?
Oh, the CHIPS Act. Yeah.
Yeah.
The CHIPS, mixing up my Biden era acts. The CHIPS Act helped onshore some of these things. And that's where you saw the huge Arizona TSMC facility get underway. And now it's the other way. They're going to hit you with the tariff.
The stocks that you would expect to react negatively to this, like Nvidia and Apple, haven't really been shaken up too much. And I wonder if that's just because investors are not totally sure whether or not this is the final version of this. They're waiting for, kind of a clearer explanation of what exactly this is. But we've seen this with, I think, all the tariffs, right? One rate gets announced, they backpedal or they change it, negotiations go underway, and then they will have a final rate or a kind of clearer guidance for specific countries as a result of those negotiations. I think the market is definitely fatigued from a lot of the tariff stuff. And I think that investors and traders are starting to look at these things as not the final word with regards to some of the trading policies. So definitely worth looking into a little bit further and us keeping our ear to the ground for it. But I would just say, I don't think they can meaningfully do very much when it comes to semiconductors, because it's just like that we don't have anything in the US that matches what Taiwan's doing with TSMC. These chips are the backbone, or rather the brain, I should say, of basically every electronic device we use at this point. I don't think there's much wiggle room for them. So
cool. Any thoughts, Matt?
The immediate market reaction was a rise in share price for Nvidia, Apple, and TSMC. I haven't dug deep into the details of the tariff itself, but the headlines were that they're heavily riddled with exemptions, and the fact that the market reacted that way makes me think that this is not as potentially big of a deal as it sounds, particularly for the U.S. companies. The Trump campaign has been very clear, the administration that is, that they want more U.S. manufacturing. So yeah, to your questions earlier, Colin, that might be exactly the case, right? They tariff chips on the way in, but if you're building in U.S. manufacturing plants in the States, that it doesn't matter. But my instinct would say that the manufacturers of ASICs, bringing it back to the mine industry, that have a strategy in the U.S. Would be kind of insulated from this. Like those right, Orodyne's here, right? And
the IP is here, but the actual fabrication is
right,
and they're undisclosed locations, probably in Southeast Asia.
Okay.
Yeah. Speaking of, before we get to the next subject, speaking of onshoring stuff, there's stuff from Block is apparently happening soon. So we'll see if there's any announcements out of that camp. Let's go on to the China story here.
Yeah. So it's Groundhog Day, gentlemen. For those who are chronically online, and I assume that most of you are chronically online, because we're all chronically online, especially if you work in Bitcoin. Over the last weekend, there were kind of these reports circulating through some of these gimmick news aggregation accounts like Unusual Whales, but even Polymarket tweeted about it as well. There were some other kind of macro finance accounts that tweeted it too. Don't know where it originated, but they were saying that China is banning Bitcoin mining, Bitcoin trading, and basically anything related to crypto. And this is unequivocally, at least right now, just not true. There has not been any new guidance on the CCP's website. And I think the takeaway from this is you really have to be careful with whatever you're hearing about what's going on in China, unless you have it confirmed from people who actually know how the government works and how their regulations work and how laws work in the country. But you can go on the CCP's website, and I'm going to open up this page from the CCP website of the original China mining ban from 2021. There's not been an update to it. So to back up, China has banned Bitcoin mining, at least on the surface, right? And on paper since 2021. There was a province by province rollout of some of these bans that began, I believe, like in May of 2021. And then the Chinese government put out an official order, September of 2021, outlining a notice by the National Development and Reform Commission and other departments on the regulation of virtual currency mining activities. And so there hasn't been a change to this order. This is the one that originally kicked most of the miners out of the country. And as far as I know from sources that I talked to, there's nothing new that has come out. Now, my question is, where did this come from? Sometimes you'll see these stories percolate through social media and they're misunderstanding something because of the language barrier and also just the general ignorance that you would have of another country's laws, right? I mean, the US legal system is complicated enough. Try understanding the Chinese legal system when you don't speak the language and you've never lived there, right? So I'm wondering if there was something that was misinterpreted or if there is something that's potentially in the works. This is just speculation. This has not been proven. But if there's something maybe going on behind the scenes and it kind of got leaked out and then someone misinterpreted it and then they publicized fake news about it, right? So all that to say, we could see something come out in the coming weeks of the Chinese government issuing new guidance around Bitcoin mining or something else, but that's not confirmed. I'm just saying that in the past, we have seen these news reports come out and they're spurious or they're, misleading, not quite on the mark. And then something else comes out a week or a month later and shows, okay, this is what those reports were actually trying to get at. So no idea whether or not that's going to manifest in anything different than what we already have seen. But just a few other things that I noted in this piece that I want to point out. It's interesting that this came out when it did because there have been reports of renewed interest and renewed expansion of Bitcoin mining in China. Some of the ASIC brokers and some of the Bitcoin mining software and services companies who have contacts there have told me that they've seen renewed interest from Chinese clients of building out infrastructure for Bitcoin mining in the country. I heard from one ASIC broker that immersion mining is becoming quite popular over there because you can avoid making a bunch of noise and it's much harder to find your farm, right? If you're not using air cooled, where, you can hear it from, however many thousands of feet away, whatever. The other thing that too is that I would be curious to see, just how many Chinese miners are like looking at China versus maybe moving other things to the US, like with Bitmain we talked about, right? Last week we were talking about how, they're starting to import ASICs, raw material for ASICs into the US. And so there are so many different things at play here. It makes me wonder, what exactly is happening with mining in China right now. It's a story that I want to kind of key into over the coming weeks. I would be surprised to see that these miners are like expanding if the government is cracking down on them again. That being said, maybe the government is thinking about issuing new guidance because there is more activity going on in the region. So just a quick breakdown. Last little piece of data is hashrate index estimates that roughly 13 to 14% of the Bitcoin mining network resides in China right now. So roughly 13 to 14% of hash rate on a given day comes from China.
This was a confusing report for me because the change status for China would actually be positive guidance, right? We haven't heard anything from them. The last thing we heard was banning of Chinese mining. And the word on the street through the grapevine of the community is that, as you said, Colin, that things are growing in Asia from a mining perspective. Either way, at this point, I'm not very worried. I don't think that there would even necessarily be a major market impact if this news broke. I guess we know that now falsely because it's broken. But there's so much precedent now on China having adverse legislation or opinion on the Bitcoin space. I believe the first time they banned it was Bitcoin trading activity among financial institutions, handling of Bitcoin transactions was the language that I remember. It was back in 2013. China has banned mining, I think, something like 8 to 12 times or something like that in Bitcoin's history. So I don't think this is as big of a deal as maybe some newer folks to the industry would think it should be.
It is insane how this story resurfaces every few months, maybe. Maybe that's a little too generous. Maybe it's every few years. But the 2021 ban was obviously the big ban, and that was on a province by province nature. There was Bitcoin miners just hauling their S9s out of random facilities all over South China. And a lot of the movement at the time was actually between the great movement that they had every year between like different provinces, because they normally mine in one province during one season, another province during another season, and so you kind of got caught between there. I don't think there's too much more to say on this story, but if you are just on Twitter and scrolling, and that's how you get your news, these are the problems that present themselves, because a lot of the stories on there are not very solid. So shield the block space, check out our podcast, enjoy our other stuff, because we're going to cover it with a little more touch.
We are CleanSpark, America's Bitcoin miner, a publicly traded company with the largest operating hash rate, powered entirely by self-operated infrastructure across 4 states. This is our proof of work. We are setting the standard for what's next. Learn more about the intersection of energy and Bitcoin at cleanspark.com.
I think we should go to this MicroStrategy piece, which we're going to throw to Matt to cover. The idea is that Strategy will no longer issue its MSTR shares below a 2.5x mNAV. So, Matt, what does that mean, and why do you think this is notable?
Yeah, so mNAV stands for multiple on net asset value, but basically what that means, the net asset value that people talk about when it comes to MicroStrategy and other treasury companies is the holdings of whatever crypto asset on their balance sheet. So MicroStrategy is Bitcoin, right? What is the multiple part is the market cap of the stock. So I think what they're doing here is just trying to give some expectation to the market on when they will dilute or when they will have a round of raising, so investors can get a better idea moving forward, right? So they're kind of setting a rule here that they're not going to raise unless they have really a pretty sizable premium, right? 2.5 times pretty sizable premium over the mNAV. I guess I should say, generally what these companies are doing is they're saying that when they're at a premium, I can raise cash on a per share basis greater than that share is tied to the Bitcoin value. And so I can increase on a Bitcoin per share basis, right? The holdings for my shareholders, so that, and it's a way that it's not actually dilutive for the metric that they care about. Yeah. In a reverse sense, you would, if it was at a discount, right, that flywheel would kind of work the other way, where if I have, $50 worth of Bitcoin per share, but I'm at a discount and can only raise money at $45 for Bitcoin per share, and I would raise that, I would go out and buy Bitcoin, I wouldn't have parity with the current level of shares being tied, right? So that's kind of what people think about as kind of the scary side of what this could become should there be a bear market, right? And some of these things unfold. MicroStrategy is a really interesting case study here because it goes beyond my knowledge. They're almost like a capital market platform at this point, with their different types of preferred stock offerings along with their common stock, and the different types of investors that they're trying to pinpoint in order to raise money to generate more Bitcoin per share, right? To add more Bitcoin on their balance sheet. But I would say in a nutshell, what this story is about, from my perspective, is they're kind of just trying to give themselves a rule and some guidance to their investor base as to when and how they're going to actually raise money moving forward.
The quiet part out loud of this entire thing is that they said they're not going to dilute common shares unless they need to raise money to pay out the preferred shares. And I think that this is, I don't know, a lot of people were talking about this. We've talked about it on Bitcoin Season 2. But the biggest elephant in the room for, I think, some of these treasury companies like Strategy, where they're issuing these preferred shares that pay out a dividend, the yield has to come from somewhere, and they do not cash flow enough to pay out the yield. So you're going to have to continue to dilute or raise, debt through converts or whatever. And, it's not an original thought, but you need to say it. I mean, at what point do these things just kind of resemble pyramid schemes, right?
Yeah.
I mean, tell me where I'm wrong, Matt.
No, I just want to come in because there's something we saw recently with one of the East Treasury companies that they did a buyback of. Now they were at a premium they're at a premium mNAV wise, so it's curious. But the idea would be that if MicroStrategy or one of these companies is a discount from an mNAV perspective, that it would be kind of like you'd think of it as they're at a discount to their book value, right? A company's at a discount to their book value. So I'm basically paying, I saw a deal at Costco last week where I could get $100 worth of Alamo Drafthouse gift cards for $75. That's the idea, right? Is that's what you would be doing. The companies at a discount to their book value. But the question for these treasury companies is, how would they raise money to buy back, right? Which I think you're rightfully calling out, Colin.
Yeah.
Are they raising debt of which they have to pay back with interest later? Are they selling some of their treasury holdings, whether it be Bitcoin or crypto or something? Like, how are they going to do that? I think is an outstanding question.
I want to jump in here with one thought, and that's this piece that we wrote on Blockspace about the Stretch IPO. So part of MicroStrategy's whole process, strategy, formerly MicroStrategy, is that they have like all these different preferred stocks around it, and there's a great image that they actually did tweet showing it as a pyramid, right? Where like I think is MicroStrategy shares at the top, and then like all the other ones are kind of like helping support that share price. And then they've had a few different like renditions of this graphic to show how they're supporting. It's like Bitcoin's here, MicroStrategy shares are here, and then like all these other preferred shares. They are working, right? They are working right now. We have this image up if you're watching on YouTube or Coindesk TV. The largest equity IPO in the US this year was the Stretch IPO by MicroStrategy. That beat out CoreWeave, it beat out Circle, beat out a lot of other names, and it beat out their former one, the STRD, Stride. And I think part of it is because they are trying to build out on the risk spectrum, like their curve of different Bitcoin related equities. And so this Stretch one, it's going to stay like around $100. It's going to compete with money markets. We did a nice piece on this, and that is supposedly going to help them kind of keep the whole facility running. And so if you have all these equities that, they can also dilute against those. And as they dilute against those, they can pay out on the main shares, right? So I do think there's like something to that effect. However, I get cautious and scared about this. Matt has some thoughts for a second, might correct me. But I do get scared about this for some of the other companies. I'm less scared about it for MicroStrategy because I think they're such a big name. And I think this chart gives me like a little bit more comfort. The fact that like there is a lot of money that's interested in this. But, for like the 20th knockoff of this, like what are you really getting out of it? Can you really be the 20th knockoff and do well?
Question I have, because they're these preferred stocks, right? They're paying them dividends. If they're struggling to raise capital, Bitcoin's in the down market, it's going reverse. And a lot of these kind of reflexive loops isn't helping them on the way up start to go in the other direction. Where do they get the money to pay out, right?
Yeah. And that's one really nice article. I'll have to find it and see if I can link it in the show notes, kind of describing this in the lens of like the 1920s and how there was like a very similar concept with like trust companies at the time. And people would say like, hey, this like trust company is worth this much money. We're going to like, buy a bunch of them. And then if the market starts faltering, the trust company has a lot of cash on the balance sheet to go buy and back its equity of itself. And then you can keep the stock price up. But the question for those trust companies at the time was like, okay, you start buying your own stock, but you are the only bidder at that point. There's no one else in the room. So you're just buying it from yourself, basically. And at some point, the price starts falling apart because there's no one else in the room. And so for these companies, I think there's a similar question that like, yeah, if you're in the downward spiral, are you going to start falling apart there? And what do you have? The thing for them is they do have Bitcoin, and their liquidation point is like, around 20K or less, even after all these different things they've done. So there is so much room for them to be safe and okay, at least on the MicroStrategy side. I worry about some of the other ones that are like knockoffs in the United States. And I think that's why you look at some of the leaders in the space for this. Like I think Nakamoto and UTXO Management would be one. They're looking at doing this same play in different jurisdictions and not in the US. They kind of see the US as being already done. And so I think that's where they're looking for different countries. And that's why Metaplanet did so well, because they have a Bitcoin treasury play, but it's a tax advantaged system in Japan that they're able to do that.
Sorry, Matt, just one thing. We covered the investment trust bubble from the 1929 stock market crash on Bitcoin Season 2, comparing it to these treasury companies last week for Writer's Room. And this is the only time you're ever going to hear me say anything like this. But what's kind of ironic is something like ETH or SOL, if you're going to issue preferred stock to pay a dividend, actually might make more sense for some of these companies, in the sense that if there's actually investor demand for a treasury company like that, you can actually stake the asset, and then you can take the staking yield from that and roll it into, dividend payouts. But again, people don't really necessarily want those ETH and SOL treasuries. They're just looking for Bitcoin. But Bitcoin doesn't yield anything. So if you're going to continue issuing these dividend paying shares, like we were saying earlier, that's got to come from somewhere. And the only answer is to dilute or raise more capital.
I would say two things. One thing, that article is super good. You should definitely throw it in the show notes. And part of the reason why people are so excited for the spot Bitcoin ETFs, right, is because that's a product structure. They have daily creations and redemptions. They're open-ended funds with these authorized participants that make sure that they tie the peg very closely. So they're very efficient in that way. This is different than the close-end structure, these kind of companies and funds of the past. What I wanted to say the other side, because you mentioned it as well, Will, part of the reason why people think that MicroStrategy will continue to do well is because they have been very creative and coming out with these offerings for different investors at each point of the capital stack, right? So people, and as well, their obligations and liabilities are drawn out pretty far into the future. I encourage people to really dig into the details of these things more than we can get into on this kind of podcast, but I just didn't want to paint one side of the view.
Well, let's get over to our last story, our cry corner for the week, which less of a cry corner, there's a crying element to it, and more of just like a historic piece in the Bitcoin mining landscape. So this was from Arkham. I think the story broke over last weekend. So it's a little bit old, but I think it's worthwhile. And I think it got missed in the news cycle since it happened over the weekend. Arkham is a explorer page, and they also have like this sleuthing element where people can like do a lot of stuff on chain and look for things. And it's a pretty awesome resource. And they broke the address behind a $3.5 billion Bitcoin heist for the Lubian Bitcoin mining pool. It was a mining pool that had facilities in China and Iran. And all this heist took place in December of 2020, $3.5 billion at the time. And now it's worth $14.5 billion. So with all these Bitcoin heists, like these become some of the largest heists in history. Almost every time we have one of them break. I think the Bitfinex one was the previous largest heist to be talked about, which was also a sizable amount of Bitcoin, but 127,000 Bitcoin was stolen back in December 2020. Now, Lubian has some nice images we'll throw up on screen here, kind of showing what's happening. But basically, this pool was hacked, and all the participants lost all their Bitcoin. Now, the pool still has $1.5 billion worth of Bitcoin. We've got some more images up here. You can see Lubian just kind of rolling along through 2020, and then all of a sudden, it's not hashing anymore, as it tends to happen with these things. Matt, I know you have some data, so I'm going to throw that up on screen here now. But it's just interesting to go back in the book and look at some of these early artifacts of Bitcoin mining. And then for this one, this is a lot of Bitcoin, and who knows exactly what happens with this. Again, Arkham just kind of found the address and are now documenting it. As happens with a lot of these hacks and exchanges, we can now just kind of monitor what's happening. And if people start trying to withdraw or start doing mixing services with these large coin allocations, then these Explorer pages give the optionality for law enforcement to track down who is doing what with it. This is a lot of the way that we get the stuff from North Korean hackers to be found. But Matt, tell us about this image that you made for us.
Yeah, this is from a report I did a couple of years ago about the history of block production and tied to different pools. And it just looks at a lot of Bitcoin mining pools historically have reused addresses. And there's been some companies that have identified which ones belong to which over time. So you could track the Coinbase transactions and see who's won blocks over time. Then as well in the kind of op return, there's a time where a lot of mining pools would self-label themselves. So I did an analysis a couple years ago. You guys were interested in Lubian, so I dug up an old Excel sheet. This is what I got. It looks like they peaked at a bit over 5% of blocks produced in a difficulty period back in April 2020. My question with this story is I wonder how they got hacked, whether their keys were kind of floating out there on a database or was kind of seized from someone personally not having effective security procedures. But I mean, this is a big chunk of coins, and you don't hear about this much. I think this actually would have been a much bigger story if we were in kind of bear market times and there was less interest in the financial market side of things with these treasury companies and ETF flows and anything that's driving price, because this is a lot of coins that is being moved, and I think it raises more questions than answers. What do you guys think?
They were hacked.
I mean, voting accident. You think
it is one theory, right? I think that you could make an argument that maybe this was somehow orchestrated. Nothing to substantiate that, right? But you do have to wonder. You have over 100,000 Bitcoin in a hot wallet that is super vulnerable. Things happen, but you never know. But the biggest question I have too, not just how did the Bitcoin get quote stolen end quote allegedly, how did they get all the Bitcoin to begin with? Because there's no way that they mined. What you said, 130,000 Bitcoin was roughly how much was stolen. They did not mine that much Bitcoin over the 6 months, 8 month time that they were online, right? And notwithstanding the fact that they would have to pay out pool participants. Now, this is maybe this is just a giant Chinese mining farm that had their own pool. I don't know anything about Lubian. I don't know how they were structured, but I do wonder where all that Bitcoin came from. It had to have been rolled over from something else because they couldn't have just mined all of that themselves.
Seems like a good block space follow-up piece in the future. I think that one thing I'll leave you guys with is this is about the fifth the size of MicroStrategy's entire Bitcoin holdings, right? 130,000 Bitcoin. MicroStrategy has, I think, over 500,000 coins at this point. So there's a lot of these old addresses with tons of Bitcoin on them, whether they be Bitcoin whales like the Galaxy Digital big sale story we had the other week, or stories like this. There's a lot of Bitcoins still out there. Hopefully all those Bitcoins get safely into a Bitcoin treasury company so we can have more stability in the market in the future. But I think we can close out from there for the week. If you enjoyed the show, definitely go click into our show notes and hit that subscribe button for our newsletter. Also, go check out Bitcoin Season 2. Colin and Charlie will be hopping on the horn, so you can download that show on Saturday morning to talk about this and that and the other thing on Bitcoin. And then we'll be back next week with a little podcast / live stream on quarterly earnings for all the Bitcoin mining companies that are popping those out right now. See you guys next week. Have a great weekend.